Transparency, transparency, transparency. Did I say transparency? Yes, I did say transparency. Let me repeat transparency is key. Well, the only message is get started. Get started, get started.
Hi everyone, welcome back to my channel. My name is Reni. If you're new here, welcome, and if you're a returning subscriber, welcome back. So today's video is going to be all about financial literacy, and we're talking with an actual financial advisor. So I always tell you I am not a financial advisor, but today we have one on the channel. So we have Philippe of Kwajamii Financial, and he will be speaking to us about the actual process of working with a financial advisor. So I hope that you enjoy this video. So today we're going to be talking about being a financial advisor and how you can work with a financial advisor. A lot of you had questions about, okay, so you've learned about investing from my channel, but you don't want to manage your finances by yourself. So I thought it would be great to have a financial advisor speak to you about these things and to talk to you about his services. So I'm very excited to have Philippe on my channel, and I'll allow Philippe to introduce himself right now. Hi, Philippe. Thank you for being here.
Hi everyone, and thank you, Reni, actually for having me today. It's really a pleasure to be here. My name is Philippe Marie-Jean Robert. I am a portfolio manager and the founder and owner of Kwajamii Financial, a firm that provides both financial planning and investment management services. My area of expertise really includes budgeting, debt management, retirement planning, education planning, investment planning, and of course, portfolio management.
Okay, so I know lots of people will have questions about what those terms actually mean and how they can work with a financial advisor. But I'm very excited that you are here, and I know that there'll be a lot of added value to my subscribers from watching this. So everyone, if you're watching, make sure that you give us a like so I can know that you like these type of videos, and I can continue to make more content like this for you. So just as a preface before we start, everything is Canada. This is Canadian focused. We are based in Canada. So the first set of questions is going to be all about what the role of a financial advisor is. So the first question that we had from the audience was, what does a financial advisor actually do? And like, what are you actually advising people on?
That's a very great question. I would say a very common question. The way I answer the question is by, well, saying that we all have dreams and aspirations. And an advisor, at least in my mind, is an individual that will, one, understand your current situation, two, understand your goals, three, identify all the steps that you need to take to achieve these goals, and four, in many cases, this advisor will also help you with the implementation of each identified step. And so the same broad definition definitely applies to a financial advisor. And so, as an advisor, I will first gain a complete understanding of your circumstances, including your current financial situation, your cash flows, your net worth. And then I will understand your goals, whether it is to build an investment portfolio, whether it is to build an emergency portfolio, save for the kids' education, plan for retirement, or even build your savings within a corporate investment account if you own a business, for example. Mm-hmm. And then after this, the key is to assess all the gaps that exist between your current financial position and the financial position that you are trying to achieve. Identify all the steps that you need to take to achieve those financial goals and make the corresponding recommendations in the form of a financial plan. Kwajamii Financial offers two separate services. One is financial planning, and the second is discretionary investment management service. You can choose to take one of those two services, and that's perfectly fine. However, I definitely encourage everyone to take advantage of both services. Mm-hmm. And it's funny because it's really funny because I have always wanted to become a pilot since I was a little child, really. In a way, I feel that I have somehow become one. And when I pause to think about this, I essentially pilot individuals to their life destination. And like pilots, and this is very important to me, like pilots, I do everything I can to ensure that your journey is safe, comfortable, and that you arrive on time at your destination.
Wow, I love that analogy, and I think it's great. And I know a lot of people here are probably wondering. So, okay, from what I got from that, you wear many hats. You're not just a financial advisor who would tell you how to manage your money, but you also take it a step further, and you're able to invest people's money on their behalf. If I got that correctly.
That's right, yes.
Okay, cool. And I know a lot of people are looking for these services because although they are learning about financial literacy, they probably don't want to manage their money themselves. So I think that's a great benefit and a great value of working with somebody like you. When is the right time to approach an advisor? So say I currently make I make $60,000 a year at my job. Is this a good time to approach you? And is there a certain age or net worth that I need to be when I do approach you?
I truly believe that the right time to approach a financial advisor was yesterday. The sooner you start planning, the better. And what you need to remember, I think, is that time is your best ally, especially when it comes to investing. And so to become a client of Kwajamii, you need to be at least 18 years old and also a resident of Ontario, which is the only jurisdiction that I currently serve, well, at least for the time being. There is no minimum net worth required for financial planning. On the investment side, however, the investment management service that I provide is also referred to as private investment counsel, and it is quite common in the industry to require a minimum of $100,000 of investable assets to offer this type of service. A lot of progress has been made over the years. I do remember when I started in finance way back then, the minimum required was $750,000.
Wow.
Yes, it's hard to believe, but that's what it was 10, 12 years ago. The minimum required has definitely come down significantly, but still, the typical average $100,000 required today still remains a substantial amount. There is no question around this. I strongly believe that this type of service should be offered at a much lower asset level. And in fact, this is one of the reasons why I founded Kwajamii. And so to hire Kwajamii as your portfolio manager, the minimum is $10,000. Having said this, I don't think you should wait to have this amount to contact me. The reason I say this is because there is a lot of financial planning work that needs to be done before even thinking about investing. And while I work with you on your financial plan, I can help structure your financial affairs so that you can get to that minimum amount.
Wow. So your services are definitely way more accessible than like $100,000. So I hope that everyone here is listening that you do not need a lot of money to start doing financial planning. You can start at $10,000 and then or even as early as possible,
Yes.
and then you can work with an advisor to help you plan around your finances, which is great. Another question. This was probably the most common question that I got. So a lot of people are financially literate and they're wondering, so do I need an advisor? What is the value in working with a financial advisor? Like I'm already pretty financially literate. So what is the value of me working with a financial advisor?
Yeah, so working with an advisor can provide several benefits. One is obviously to help you build a detailed plan to reach each of your goals, but it's not the only benefit. An advisor can help you also manage or better manage your behavioral biases and avoid costly mistakes. And I've seen this over and over the years, actually. Studies show that investors like the patience and the longer term vision to stay invested for much longer than 4 years, actually. And jumping in and out of investments every 6 months or so is not something that I would recommend
Yeah.
because, one, it is extremely difficult to time the market correctly, and it is next to impossible to do it consistently over time. And so successful investors invest for the long run and stay invested during periods of market volatility. And speaking of market volatility, we had a great example of this in 2020, right when the pandemic actually started. And it shows when we look at 2020, the importance of staying invested, because missing out the best days on the market can indeed be very costly. I
Yeah.
give you one example actually, Rennie, because this is so important. If you look at the S&P TSX Cap Composite in 2020, the whole TSX Toronto Stock Exchange market returned 5.6%, plus 5.6% in 2020.
Hmm.
But the best week last year was the week of April 6, 2020. Market started to go down
In my,
in February.
okay. Hmm.
And end of March, it started to rebound. And the best week of the entire year
It's
was actually the week of April 6th. But here's the interesting thing. If you had stayed invested throughout 2020, but only missed that one week, the week of April 6th, your return, believe it or not, would have actually dropped from 5.6 if you had remained the entire year.
hmm.
That return would have dropped to minus 3.6
Oh, really?
just by missing that one week.
Hmm.
So now let's push this a little bit further. Now let's assume that mid-March you had enough and you said, "Wow, I can't take this. I need to be out. I'm selling." So, and let's say that you had actually missed the 3 week period from March 23rd all the way to April 10. So this would have been extremely, extremely costly. Now the return for the year would have dropped to minus 12% from the 5.6 if you had remained invested throughout the entire year. So
Wow.
all of this to say that the key takeaway from me is be a long-term investor, be
Hmm.
patient, stay invested.
Yeah.
So this is loss aversion. An advisor can help you actually mitigate some of those biases.
Hmm.
Fear of loss can lead investors to sell at the worst possible time. Some people call it panic selling.
Yeah.
So mid-March, a lot of people actually exited the market.
Yeah.
And working with an advisor would have actually recommended there is no change in the plan. We stick to the plan, we move forward. On the other side, if you have some money that you had put aside, maybe it's the great time actually to invest in the
Hmm.
market. So it's counterintuitive. You when everything is going bad, when everything is leaving, this perhaps means that, oh, maybe I want to be in now. Maybe I really want to be in.
Hmm.
So, an advisor can also help you with the diversification of your portfolio, because I've seen many, many people actually putting a portfolio together, all different assets together, but those assets do not provide real diversification because they move up and down together.
Yeah.
So building a diversified portfolio is definitely something an advisor can help you with. Yeah.
Hmm.
So all of this to say that successful investors make rational decisions independently of external factors, and it is easy to get distracted. Don't get me wrong. It is very easy to get distracted with all the noise out there, and an advisor can help you filter out that noise, and perhaps more importantly, an advisor will help you stick to your plan.
Perfect. That was great. I can see the benefits of working with an advisor, especially if you are someone who is an emotional investor. So
Yes.
if seeing that red, like even now, right now, the market hasn't been it hasn't been too hot right now. And a lot of my friends are like, okay, I need to get out. I'm selling my stocks. And I'm like, no, this is the wrong time to
Yes.
exit. This is the wrong time to exit. So definitely highlights the benefits of working with a professional who went to school and like knows about this. But one question I have for that, because I know that obviously you went to school, this is your full-time job. So how do advisors get paid?
Yes, so there are many different pricing models out there. You have the commission only model, you have the fee only model, you have an asset under management model, We call it the AUM model for asset under management, or you could have a combination of all of the above. But regardless, it is absolutely critical to get a complete understanding of how your advisor is being compensated. And this information, in my mind, should always be disclosed upfront to allow you, the prospective client, to make an informed decision. And in my case, I apply two separate pricing models, one for each service. For financial planning, I charge a flat fee, and clients can choose between two different packages that I offer, depending on what it is that they want to accomplish. On the investment side, I have an asset under management pricing model. Management fees are quoted as an annual percentage. They would be calculated daily and charged monthly. And so the higher the asset level, the lower the fee rate, which is very typical in the industry. Transparency, transparency, transparency. Did I say transparency? Yes, I did say transparency. Let me repeat, transparency is key. Unfortunately, pricing information is not always fully and clearly disclosed upfront, but be aware. As a client, be aware of that and definitely ask your advisor for complete pricing information.
Make sure you get that upfront from your advisor. One last question that we had was, how do I find the best advisor for me? So I want to make sure that this person has my best interest in mind and is helping me reach my goals. Are there specific questions I should ask them, or like, how do I find the best advisor for me?
Yeah, that's another great question, actually. I think it is important that you conduct or you do your due diligence and really take the time to discuss with each candidate that you are considering. Check the advisor's credentials, ask about their qualification and experience. Do they hold any professional designations? Verify that the person, for example, is properly registered with the regulatory body in charge of overseeing their activities in their field of expertise.
So what type of designation should we be looking for?
So it depends on the type of advisor that you are talking about. But as a financial planner, for example, you could look for QAFP, you could look for PFP, you could look for CFP designations, for example. As a portfolio manager, this works a little bit differently, but you could actually look for CIM, Chartered Investment Manager designation, or the CFA, Chartered Financial Analyst designation. But when it comes to portfolio management, you also have additional tools. For example, in Ontario, you could verify that the person in question is properly registered with Ontario Securities Commission, for example. Ask about the approach that they take with their client. Can they clearly describe and articulate the approach that they use with their clients? That's a very important sign. If the person cannot explain in plain English, then I'm not sure what I would think of this. Yeah. Do they emphasize the importance of taking the time, especially at the beginning of the relationship, to gain a complete understanding of your situation before making any recommendation? That's very important. In the case of an investment advisor, ask about their investment belief, their investment philosophy. Does that match your investment style and preferences? I'm sure you know, Rennie, the old debate about active investing versus passive investing. So some advisors like the active approach, some others like the passive approach, but know exactly what it is that they do provide.
Yes.
Assess potential situation of conflict of interest is another very important aspect. Ultimately, you want to work with someone who will place your interest first above the interest of their employer and certainly above their own interest. Ask about how they are compensated. I think this goes without saying, but I will say it and emphasize it.
Yeah.
How they are compensated could actually create potential situation of conflict of interest, whether they have any referral arrangements with third parties. The underlying question is how independent this advisor is really. Get a sense also of whether the advisor is more inclined to sell financial product or to provide you with the right advice that will ultimately enhance your financial position. There is one aspect that I wouldn't want to underestimate is you need, as a client, determine whether this advisor will be a good fit. You will be sharing a lot of personal information over the course of the engagement. And so you need to be essentially comfortable with that person. This is essential because the advisor needs to have a complete picture of your overall situation to provide you with the best advice.
Mm-hmm.
You also need to find out about their values, their motivation,
Yeah.
essentially what makes them wake up every morning and go to work. I think it is important because this speaks to their character. What exactly do they want to accomplish? Their purpose, their mission, their vision, and so on and so forth. All of those aspects, I think, you should actually try to get more information about by having that deep discussion with all the candidates that you would be considering.
Perfect. So I think what you really emphasize is you need to do your due diligence. It's a big, even if you don't have much money, you're still giving your money to
Yes.
someone, and exposing your money is a very private thing for a lot of us. So exposing your financial details to people. So I think anytime you are doing that, you need to make sure that you ask the right questions and do your due diligence when you're reaching out to somebody. And if someone wanted to reach out to you and start asking you those questions and see if it will be a good fit, how can they reach out to you? What's the best way to reach out to you?
Yes, so it's very easy actually. I am on social media. You can actually search for my name. I have also a website, kwajamii.com. So Kwajamii, .com. You can actually send me a message, or you can actually reach me by email, p_mjr at kwajamii.com. So those are my initials at kwajamii.com.
Perfect. And I will leave all that in the description box so that if anyone wants to reach out to you directly, they can do that. The next video, we're going to answer I'm not going to answer. You are going to answer the questions that everyone submitted. So I hope that everyone will join us in that next video. Do you have any final words or anything that you would like to say before we go on to part two?
Well, the only message is get started. Get started, get started.
Thank you once again, Philippe, for being on my channel.
Yeah, thanks again, Rennie.
Thank you. Bye, everyone.
Bye.